Hello, my name is Raitis, and welcome back to another weekly outlook here on Farewell Total Return Investing and Trading. I hope you had a great weekend and had time to reflect on your past trades and recover and enjoy a wonderful time with family and friends. But today we are going to take a look at the market and what we can expect going into the next week. I will tell you how my approach is trading the next week, how I will approach the market, what I'm looking for specifically going into the new week. And with that said, ladies and gentlemen, let's get going. As usual, we start off with the XY, and I have to talk with you about a specific topic here on DXY. Again, we can start off with the monthly time frame, but nothing has changed there yet. We have all the same PD arrays outlined as last week. We traded down into the monthly fair value gap, a busy right here. We're seeing a small rejection. Again, we have reached a long-term target, which is this swing low from the 4th of November, the weekly candle. We traded below this low, so we can expect a measure of distribution on DXY. Again, hedge funds will seek to reallocate and redistribute their portfolio due to the massive run on 2 weeks ago on DXY and on foreign currencies, as you can see it with euro. Same thing here, but just in reverse. We sold off the weekly inversion fair value gap. Again, we have reached our target for DXY, and there are a lot of low probability filters that are lining up. Of course, we have a daily fair value gap right here in the weekly time frame, which is a new PD array for this week to watch out, coupled with the consequent encroachment of this SIBI. So in a SIBI, we don't want to see market close above the consequent encroachment, so we will be watching that as a key major level. Okay, but now let me get into the low probability filters and why the last couple of trading weeks were so tough. Let me explain. First of all, we have this overextension, okay, on the daily time frame and on the weekly time frame. You can see this one weekly candle has wiped out months of trading in 1 week, okay? And you can see the result of that is last week we saw a consolidation profile. You can see the last weekly candle was low on volume, and it's basically a doji candle. Okay, we took out the low and then basically consolidated for the rest of the week. So number one is overextension. Number two is, oh, I didn't mean that. Now we have trapped order flow on the daily time frame. As you can see, we traded down into the rejection block and the low right here. We traded close to the rejection block right here, rejected this level, traded back into the daily inversion fair value gap, sold off, and didn't see any continuation lower. Okay, we saw only a weak rejection below this low, and the market traded back into the range, back again into the consequent encroachment of this inversion fair value gap, traded a lower, rejected this level, and traded back again, rejected, and now we're sitting right at the consequent encroachment of this trading range. And if you just look at the 4-hour time frame, basically how the last week has traded, it's basically all, so this is Monday, this is all basically a large consolidation on the 4-hour time frame where we are just hanging around between this premium and discount bullish PD array, and market is just building up new positions. And we don't know, I already told you this stuff last week and we anticipated this. And I'm not just saying this in hindsight, so please watch my other evening commentaries or trade forecasts, breakdowns, whatever, session preparations, weekly outlooks. Once we meet a long-term target, the market can go into the any of the four market profiles, market delivery profiles, which is consolidation, reversal, expansion, and retracement. Or reversal, I forgot to mention. So they're the four. And we really don't know what the market is doing. Right now, we're inside a consolidation, okay? Now we have to clearly leave this consolidation in order for us to make an informed decision, because right now the market could really sell off from here or revisit the weekly fair value gap, which in my opinion is the most likely scenario. Now my internet is back, nice. So just by studying the weekly candle closures, we could see a rejection from this low. So I think we could trade up into the CB low, at least for this week. Okay, now again, we could trade up here into the weekly fair value gap BSC high. I don't know why the charts are lagging. I hope we get through with that. But again, we have a lot of low probability filters lining up. In the fourth, so at overextension, we have trapped order flow, and a third low probability filter. The third low probability filter was that market has reached a long-term objective. And now we have the fourth low probability filter, which is crack in correlation with T-bonds. Now I don't know why internet is, my Wi-Fi, perfect, is lagging around. I hope we're gonna get the charts soon. I don't want to cut this video, so I hope my internet gets back soon. We should be good right now. Okay, fine. So you can see we had a massive sell-off on DXY since 3rd of March. And, oh, come on. Now we should be good again. Now, since the 3rd of March, if we're gonna take a look at T-bonds, you can see if DXY is rallying higher, dropping aggressively, T-note futures should see massive upside. And this was just not there in the market because T-note futures have been inside a consolidation. That's why dollar was allowed to drop that hard. But of course, US dollar was fundamentally weak. That's also a case because of all the tariffs and so on and so forth that Trump imposed on Canada, Europe, and China. Again, but this is just the fundamental explanation. But what we saw also on T-note futures is that market has also traded into a higher time frame, long-term target, which is the weekly high right here, okay? It's even a monthly high. So we can expect also a measure of distribution at this level, and we're seeing that on all of the T-note futures, okay? Because we have traded into a long-term target, market can shift into any of the four delivery profiles, ladies and gentlemen. And now we're seeing a consolidation on T-bonds, and this is also reflected on DXY as well. Now, the question is, what are T-bonds willing to do? This is the 30-year Treasury T-note futures. If we look at the 10-year, we traded above the high, traded into the bearish order block. Now we're seeing some rejection. We have this BSC right here. The consequent encroachment will be an important level going into the trading week, and if we trade down there, again, we're stuck between this bullish order block right here and of course the monthly and weekly PDRAs, or we have the daily rejection block right here, and we're just trading inside this trapped order flow consolidation right here. Same goes for the 5-year T-note futures. We can see that very, very clearly. Bullish order block and rejection block, and we're just trading back and forth inside the range. So yes, I traded last week, and I probably traded too much, and that's why we had a not so favorable trading week. In this week's, when you see a daily low probability filter, the one of the four I have mentioned, if you take one loss, then you definitely should step aside from the charts, because you can see that the market is not willing to move in your intended direction, whilst confirming with a low probability filter that we're currently in an unfavorable market condition. And as a professional trader, you want to trade in the most favorable conditions as possible. Okay, so I think we covered that. Really, I need to wait for more market information. We have the FOMC statement this week on Wednesday. Now we're gonna take a look at the economic calendar later on. Let me finish off with the equities. Okay, again, we have anticipated a sell-off. We have the daily fair value gap right here. We had a very nice short on YM last week, which was this short. Again, as market traded into the inversion fair value gap on the daily time frame. Now you can see this trade was totally fine, because you can see we traded below the daily inversion fair value gap right here on a closing basis, and then another candle which was willing to close lower. Of course, we traded into a weekly rejection block, and we saw some measure of distribution. We zoom out the next key PD array, which is optimal for new accumulation of shorts, was this in daily fair value gap coupled with this bearish order block coupled with the daily inversion fair value gap. So a lot of levels lining up right here. So we can expect a measure of a new accumulation of shorts at this level. Okay, and what we did last week is we longed the we sold the high of basically of the week. We sold basically the high of the week again, and market inverted this level and showed willingness to displace to the downside. And as we then traded again below the low, market rejected and showed no willingness to continue for more discount PD arrays. Market shifted then back into the range, and now we're in the same scenario as we are on DXY. We are in trapped order flow, and this is a condition where we don't want to trade, because again, if I just zoom in into the 4-hour time frame, and then you can see we are also basically right now inside a large consolidation. Okay, ladies and gentlemen, that's why we don't want to trade. And again, we predicted, I didn't trade this trade. I said on Friday that on Thursday that we are going to get a TGIF profile, and we did so. Okay, so this could have been your first long right here. You would have taken profits at a 1 to 2, because you don't want to squeeze a lot of profits with relative equal highs. So 1 to 3 was also possible. Again, then we ran at London close, we ran below the low again, and if you would have been break even, you would have gotten stopped out break even, which you should have been at least by this point. So yeah, the rejection block, and you would have been break even definitely right here, or should have taken first partials. So again, very nice trade, because we have traded into a key hard time frame target objective. We don't want to look for continuation trades, but we can look for reversal trades if it's a TGIF profile. Okay, market showed willingness to displace higher. We got an optimal trade entry from this order block, and yeah, it's basically free money. And the only thing why I didn't trade the setup, I told you that also, is because NQ hasn't reached its target objective, and TGIF profiles become low probability if the market is near or at a long-term target objective, because market could easily sell off. And it's a little bit tricky to go in and look for reversal trades from here if we're so close to the target objective. This is the only reason why I didn't go into the market and didn't trade this setup, okay? I mean, it played out wonderfully. Yes, you would have gotten a take profit, first take profit, or break even if you didn't take any partials. Excuse me, but yeah, it's still a wonderful trade. You should have definitely been in break even, and yeah, maybe you even squeezed out some profits. But again, this was the reason why I didn't trade this setup. Now let me get into this week. So again, I told you already, we are in trapped order flow conditions. We are trapped inside a premium and discount PD array. The premium discount array is the daily inversion fair value gap, and the discount array is, choose one of them. It's the monthly order block open, weekly low, sell side liquidity pool, or the rejection block, okay? So you can see basically we're trading back and forth inside this range. After we have met a long-term target objective, market could distribute, consolidate, reverse, retrace, expand, whatever. We don't know. We have to wait for more market information, and that's what I will be doing. I will be sitting out Monday completely. Now, let me quickly pull up Forex Factory. I'm gonna pull it up from another browser right here. Let me quickly filter out the unnecessary pairs. Wonderful. So you can see Monday, even if we have poor retail sales, now this is not Eastern Standard Time. Quick. Oh, wait, minus, we're here, Eastern Time, perfect. Even if we have news at 8:30 on US dollar, still, I don't want to trade this day because we're in trapped order flow, and this makes really no sense. On Tuesday, Canadian dollar has CPI, okay. Nothing for the US dollar. And then on Wednesday, guys, this is also a very interesting case study. So Tuesday is also a day I don't want to trade. Why? Because we have FOMC statement on Wednesday and no news release for the US dollar on the day before FOMC. And that's why we had this same protocol applied last week, I think, or 2 weeks ago when we had the NFP news release. I said where there is a day without no high, medium, or impact news release, then we don't want to trade this day if it's an NFP or FOMC week, okay? That's the one protocol, and let's apply this also to this week. We don't want to make the same mistakes as we did last week, because we had a trade on this NFP day where we had no news, NFP week day where we had no news, and yes, we took a trade and then we closed it with a partial loss, and then market just rallied in the afternoon, so at an odd time. And yeah, that's why I don't want to repeat this mistake this week again. I'm seeing the weekly outlook is a little bit long, but that's okay. You're learning some valuable stuff, learning from my losses. That's I hope that you find that very valuable. And again, so no trading on Monday, no trading on Tuesday. For most of you, this is absolutely crazy, and I will have to be disciplined, very disciplined, to don't trade on these 2 days, okay? And then at the FOMC news release, I might be looking at the post FOMC for a trade. Okay, so that's that. And then on Thursday and Friday, I will just normally look for trades. Okay, if we haven't met our target objective and if we're still not inside a seek and destroy profile or trapped order flow. So that's that. I really don't know what to say you. We're in trapped order flow conditions on DXY, on T-bonds, on equities. Let's take a final look at gold, and we're gonna close out the video. Gold has reached our target of 3,000, ladies and gentlemen. We have been calling for this level, I don't know since when. Since probably January, somewhere around the end of January, maybe even earlier, I don't know, we have to look, but we have been calling throughout this level rally for the 3,000 level as a standard deviation target objective, and it's a wonderful analysis. What should I say? We gave out on the last weekly outlook, we gave out this long from this daily order block, and we take this level. It's, you can see it absolutely literally no drawdown, only 0.24%, and then an upside of 4%, 3.8 to 4%, somewhere right there. So very beautiful analysis, and what should I say? We're at all-time highs now. Again, if we are at all-time highs, this is a short-term target objective. This means we still zoom out on the daily time frame and look for new areas of re-accumulation, and that's of course this BISI. I will be very closely looking at the 50% of the BISI right here and how we trade around this level. If we close below, then market will probably retrace back into this consolidation right here. And but again, I don't want to trade gold at this moment. We're at all-time highs. We're in a deep premium, and with that said, this is it. Of course, we have also the weekly order block as a discount PRA, and with that said, ladies and gentlemen, we're wrapping up this weekly outlook. Again, I will not trade for Monday and Tuesday, but I will still do evening commentaries to catch up on market movements and what happened. And I will update you this evening, but I still won't trade Monday or Tuesday, no matter what happens. The first time I will be considering to take a trade is post FOMC news release. And I hope you really found some valuable insights from this weekly outlook. I know it's long, and if you watched till the end, you did a great job. Leave a thumbs up. Subscribe to this channel. Join the Discord. You will get exclusive updates from me in the Discord channel and trade ideas going into this week after Wednesday, the FOMC news release. Ladies and gentlemen, I hope you enjoyed this weekly outlook. Stay safe, trade safe. We will see us today in the evening in a evening commentary. Till then, bye bye.